Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we made it to the end of the year. This will be my last podcast of the year. Before I forget, I want to wish everybody a happy new year. Have a safe and great holiday weekend. Enjoy yourself. But we made it. We made it to the end of the year. No market crash. We're doing well, right? Actually, we closed the year out really strong, right? This will be the 9th up week in a row. Very fabulous, right? We're on this tear. We're in this new bull market, if you will. Now, of course, that's not the way I see it. Actually, I think there's going to be a lot of profit taking in January. The professionals call it distribution, right? They were the ones that ran this market up, and now they're going to take their profits. It's distribution. We'll see how that plays out, but I'd be very cautious at this level. A lot of people are getting very bullish on the market. That's time to be cautious. Just my take. Yours may be completely different. Now let's get over to the real estate market. All right, so my last episode, I made the comment that I think houses will be much lower 3 years from now. And a lot of people got upset with this. They say, you have no proof of that. And they're right. I don't. Nobody knows how this is going to play out. You know, maybe we print 50 trillion, 100 trillion, and maybe they make that house price stay up. I'm not sure how it's going to play out, but my take is we're going to be much lower. Okay, now here's why. Okay, look at right now, you've got the pending home sales. Pending home sales, right? We're at a record low. Record low. It's never been recorded lower. As long as they've kept records, this is the record low for pending home sales. In other words, the market is frozen. The market's frozen. You know, they can tell you, oh, we went up by 1% last month, and maybe we did. I don't really know, but the market's frozen. Nothing's selling. Pending home sales are at the lowest it's ever been. Now, you think about that. Now, rates have come down, right? They were up over 8, and now they're down around 7. So they've come down over a whole percentage point. But nobody's buying. Pending home sales are still at a record low. Now, you know what's gone up? Listings. Listings are up 8% over where they were last year. Okay, that's interesting. 8% more inventory than there was this time last year. Very fascinating to me. Okay, so we got rates down, we got listings up, and we got nobody buying. Now, why is nobody buying? Look, here's the reason. Okay, let me tell you. Let's start with the affordability factor. Affordability. Okay, so we got affordability, right? All right, so a potential home buyer today, a household income needs to be $115,000 to buy the median priced home, right? So they need to make $115,000 just to pick up an average price home in the United States. Well, here's the problem. That's $40,000 more than the typical household brings in. The average household brings in about $40,000 less. So this is a sign of a bubble, right? Now, if it wasn't a bubble, those numbers would be equal, right? A typical household, let's say they bring in, let's just go with $75,000, and that's what it costs to buy the average price home. That would be normal, but no, it's $40,000 more that they need to bring in. Now, where's that money going to come from? Well, it doesn't come. That's the problem. That's why nobody can buy. They're not affordable. Now, this $115,000 number has never been higher. That's the highest number on recorded history to buy the average price home in the U.S. Now, just in the last year, that number's gone up 15%. A year ago, it was 100,000. Now it's 115,000. So the number is at this extreme high, this record high, right? And if you go back to before the pandemic, that number was 50% of where it is now. It was right around 60,000 when the average, income for a household was 70,000. That made a little bit of sense. But since then, we've doubled that amount needed to buy a home. This is the sign of a bubble. Now, I don't hate real estate. I love real estate. I'm a real estate broker, but now is not the good time to buy. It's a bad time to buy. Now, of course, you listen to Ramsey, LaBarbara Cochran, they'll tell you it's a great time to buy. But they were saying the exact same thing back in 2006, 2007, and then the crash came in 2008, right? What they were telling you, this is a great time time to get out there and buy. You see, you don't hear about the crash until it's too late, right? You don't hear that there's a problem until it's too late. They're not going to tell you there's a problem until it's too late. They want you to keep going out there and buying. And if you go out there and buy right now, you're probably going to be one of the bag holders. Now, there's a lot of reason I think prices are going to be a lot lower 3 to 5 years from now. I mean, you can just go with demographics, right? I mean, the baby boomers are getting older, right? I mean, and assisted living is very expensive, very expensive. Where's that money going to come from? They don't have that money. It's going to come from selling their house. That's where it's going to come from. There's going to be a lot of inventory on the marketplace. Right now, all the articles, there's no inventory, there's no inventory, there's no inventory. Mark my words, 3 to 5 years, they'll be going, wow, we got a glut of inventory. Wow, these prices are really low. Wow. But you got to wait that time, and that wait can be painful. A lot of people are going to go out and buy a house now. They want to start a family. They don't mind that the house is going to come down 40 to 50%. And they're okay with that. They can afford it. They say, well, we'll write it down, and maybe 10, 20 years, it'll be back up to where the price Billy Bob got out at. We'll see how that all plays out. Once again, this is just my take. Go listen to Dave Ramsey if this is making you nervous. That one poor guy left me a comment. Man, he got all flustered. He was very upset about my prediction, you know. He should not be listening to my channel. My channel's not for the faint of heart. We talk about the truth here. We talk about reality here. You want fantasy? Go with Ramsey. Go with Barbara Cochran. Great time to buy. But really right now, it's not. You see, now here's the problem. Here's the problem. Okay, so they've kept rates suppressed for 14 years at 0%, 0%. That created this bubble, right? But that's not all they did. No, they went out there and they bought not $1 trillion, not $1 trillion worth of mortgages, right? Because no one else will buy the mortgages, right? So not 1 trillion, not 2 trillion. They got $3 trillion. They're still on the balance sheet. They're losing their butt on this. Now, who is it that's losing their butt? It'd be me and you, the taxpayer, because it's being held on the Fed's balance sheet. Now, they bought these mortgages at 2.8%, so these mortgages have gone down in value. These mortgages are up here at 7%. These mortgages have dropped in value. They dropped by 30, 40, 50%. So the Fed is losing all this money. Don't worry. They don't mark things down the market. They're going to just let these ride out over 30 years, right? Now, their balance sheet, believe me, it's going to be increasing. What is it right now? I don't know, 8 trillion, that's called, $8 trillion. I say their balance sheet in the next 5 years hits 20, maybe even $30 trillion in the next 5 years. They're going to have to buy everything to keep everyone afloat. You see, we talked about in the last video, I talked about the commercial real estate problem. Commercial real estate, just one building's $100 million. Who's going to bail that out? Probably me and you, probably the Fed, probably that, because it's the banking system, right? They don't want the banking system to go down. But here's another serious problem. Another serious problem is corporate debt, corporate bankruptcies. Do you realize $2 trillion has to be refinanced in corporate debt in the next 2 years, 2024, 2025, $2 trillion worth of corporate debt. Okay, now these are zombie companies. What's a zombie company? It's a company that doesn't bring in enough cash flow to even pay the interest on their debt. But now their debt was at this 2 and 3% level, and now they have to refinance it up here at 7, 8%, but they don't even bring in enough money to pay the interest. How are they going to finance this? Is the bank going to give them these loans? Well, if they don't, what happens? Well, the 20% of the companies would be going out of business. Now, here's what's interesting. We're supposedly in this fantastic boom time, right? Okay, stock market record high. Houses are almost up where Billy Bob got out of. Everything's doing great, right? We're in this boom time. But yet we've had the most corporate bankruptcies this year in 2023 since 2008. What else has been a problem in 2023? 5 of the top 50 banks went under. That's 10% of the banking system went down. And the banking system in 2024, my take is it's going to get really ugly. They're trying to paper over. They don't let mainstream media talk about this, but the banking system is going to fall, right? I mean, they got all this corporate debt and corporate bankruptcies are up, right? They're at record highs. Well, not record highs. They got to go back to 2008, but they're up there, right? All these corporations going out of business. And when these zombies have to refinance and they can't get the funding, they're going to be dropping like flies also. Now, what does that mean? That means we got unemployment. Okay, so the first thing we got is we got affordability problem. Nobody can afford to buy the house. And then we're going to have unemployment problem when we get this corporate debt. Corporate bankruptcies have already spiked up and they're going to spike up more. Personal bankruptcies are up 30% year over year. Okay, 30%. Now, okay, but Mike, nobody in my area goes bankrupt, and that's great. You live in that great area. But a lot of people are going bankrupt. Their businesses are going bankrupt. They're losing their job. Unemployment, I really think it's going to hit 10% in 2024. We'll see if that plays out. That's just my take. I could be completely wrong. Maybe it goes to 0%, but I think it's going to hit double digits. And what happens when you get that unemployment? Well, people can't stop paying their mortgages, first on their second home. That's the vacation home. That's going to get up for sale immediately. Then they can't pay their own mortgage. That's going to get up for sale immediately. You got a tsunami of foreclosures. Foreclosures are spiking. Corporate bankruptcies are spiking. Personal bankruptcies are spiking. Look, the U.S. is already bankrupt, right? $34 trillion in debt. The only reason we don't default is we're going to print money. And they're going to print money into oblivion. I mean, you haven't seen anything yet. $34 trillion, no. 3 years from now, we'll be at 50. $50 trillion in debt. We will not bring in enough money to even pay the interest on that debt. That's how sad the U.S. has become. That's who you elected. You elected these politicians. They're not going to stop spending money. They're not going to become fiscally responsible. I don't see that happening. Now, it'd be great if it did happen, right? But I don't see it going that way. I really don't. Now, look, I was reading this one article, right? This one article, he came out with the magic mortgage number, right? 5%, he says, if rates come down to 5%, he says house prices will drop. Now, that's counterintuitive. As rates come down, usually prices go up. But I agree with them. As prices go down, mortgage rates go down, you're going to see prices dropping. The reason the mortgage rates are going to be down is because the Fed is going to be panicking and dropping rates. Now, they've agreed that they're going to cut three times in 2024. The market is already expecting seven cuts in 2024. I mean, if they do that, here's what's going to happen. Okay, so and it's possible they will, right? So they cut the rate down from 5.25. Let's say they get it all the way down, back down to 3%. You're going to see that inflation number just take off, right? I mean, it's still running about 7%. Go on shadow stats. It's not what they tell you. And look at people go, but Mike, you can't believe shadow stats. They just make that stuff up. Actually, I think our government's the one that's making the numbers up. I trust shadow stats more than our own government, and that's pretty sad, right? But I think that inflation is going to come roaring back to the end of 2024. I think you'll start to see that. Maybe the first half, it'll be all right. But I don't even think we're going to make it through the first half without inflation popping its head back up. I think it's far from over. Okay, that's just my take. Now, a lot of people think that I'm wrong on that. They think that, they think that this magic mortgage number is going to make the sellers put their house on the market. That's going to make the sellers put their house on the market, because then the sellers could go find another house and move to where they really want to move. And I don't really see that happening, because everybody's locked in at 2.8% in your area. They're handcuffed to their forever home. They're never moving. They're going to die in that home. And once they die, then it becomes inventory again. That's how it works. It's the cycle of life. It will happen. Take my word for it. Okay, now, these corporate bankruptcies are going to be a problem. On top of that, you got the commercial real estate going to be a problem, going to bring down the banking system. Now, people have left me comments. They go, but Mike, how's that got to do with my house? If the banking system goes down, my house value doesn't go down. That's great. Your house value stays up here, but if you have to sell, it's going to be down here about 50% off. Now, look, I'm not negative on real estate. There's going to be great opportunity, but you got to be patient. There's going to be opportunities like you wouldn't believe. You're going to be shocked at the opportunities that are coming. Now, maybe 2024, it's an election year. Maybe they can get this extended out. We become really good at kicking the proverbial can down the road. And maybe they'll keep kicking the can down the road. I hope they do for another year, just so people can be a little bit happy. But people out there aren't really that happy, and they can't figure out why, right? Because Bidenomics economics, is making this economy so great for everybody. They can't figure out why everybody's miserable. Everybody's miserable because they don't have any money. Everything is going up. Even the people that are locked in at 2.8% on their house, their insurance has tripled, their property taxes have doubled, their maintenance cost has skyrocketed, HOA fees are going up like there's no tomorrow. Look, there's other expenses owning a house besides just the mortgage, and a lot of people are not that happy, really. They're really not. And we'll see what happens. We got an election year coming up. Maybe they'll vote. Who knows which way they'll vote? It'd be interesting, right? Election years are always interesting. Anyways, we made it to the end of the year. Get out to everybody. Have a great New Year's, and I'll talk to you again next year. Bye-bye now.